What's going on out there, good people, and welcome back to LMD Trading, where I am living my dream trading. Going ahead and getting this recap done midday. Sitting here, it's 12:45. Figure I'd go ahead and get this recap done. I actually was done trading about 9:35 this morning. If you want to know the truth, I was done about 9:35. Built my watch list, found some decent ideas. One of those ideas I saw doing what I kind of wanted it to do. Saw it doing something that I liked, so I went on and I pulled the trigger on that trade. I took it, didn't even have to stay in it long. We were hitting target. Unlike yesterday where I hit what I thought was my target and didn't get out of the trade, today I got out of the trade. Let's just get out of it. Let's take that profit. Let's keep it moving. Stock kept going. The trade step kept going, but I'm not mad. Made what I wanted out of it. So let's go ahead. Let's bring up TRADERVUE real quick. We'll look at the details. Reviewing trades for Tuesday, March 7th. Today was a one and done day. We took one trade, closed P&L $95. That trade was on DKS. This was an option play, and we were in this trade 44 seconds. 44 seconds, and we were out of it. Just like yesterday, I went and I looked at this trade as a option trade and as a stock trade. And I'm going to show you to make this same trade in a stock play, how it would have played out. So let's go ahead and look at it. So this is the information for the trade. I took that trade at 9:31, so a minute into the market open. Entry was 141. My stop was 140, so this had a $1 stop loss. My target was 143, and this was the details for the options. So I bought two contracts, paid $1.38 each, paid $2.76 for the trade. This contract had a delta of 0.25. So on a dollar move, my risk is going to be $50, and my target was hit at 9:32. So to take that same trade as a stock trade, the cost of it is going to be 141 per share. That's the entry. I'm going to need 50 shares to risk $50. So if this thing goes down to $140, I'm going to lose $50. That trade is going to cost $7,050. That's how much it's going to cost to take that trade. And this one hit target in 9:33. So a minute later, it hit the target. But again, this shows you the difference in cost and why options can be a valid play for small accounts if you are practicing proper risk management. You have to practice proper risk management. So I instantly know a $1 stop. I kind of scaled it up by getting two contracts. So I knew I had $50 risk on the line. Usually if I like the trade, I'll go ahead and size in. And that is what we did. So let's go ahead. Let's bring up Thinkorswim and we'll look at the charts. I'm going to turn off my camera because I'm using my trade layout. And I noticed yesterday that it was blocking some information. So this is my layout that I use when I am trading, when I'm in the market. Ladder, quick entry to get in the trade, time and sales for the stock, time and sales for the option, and level 2 for the stock. So I can look on this side of my screen and basically I have the tape. And then I got my charts over here, 2 minute, 5 minute, 15 minute, and then this is the chart for the option contract. But we got the SPY pulled up real quick. Let's take a look at it. Jerome Powell was testifying before Congress this morning. It's amazing what one person can do to the market. He gets to speaking, market just tanks. He started speaking at 10 o'clock and the market literally flushed 2 points. Pull back up to VWAP, and I got this area on my chart as a zone. And you see it just kind of traded in that zone. And that's what the SPY has done this morning. But let's go ahead. Let's bring up DKS real quick. So that's the chart for DKS. And let's find the contract. It was that one right there. Shrink that back out. So this was DKS. And I took this trade off of the 2-minute chart. So I'm going to blow this 2-minute chart up so we can kind of look at it. And I'll kind of explain my thought process on why I got in where I got in, why I had to stop where I had to stop at. So DKS was just kind of chopping around this morning, and it was trading basically on news. And notice right here at this candle here and this candle here was right around 141. So my thought on this was, if we break 141, we could pop back up to this line right here, which is an hourly channel. That's an hourly channel. I'm going to change this 15-minute over here to the hourly, and you'll kind of see why I drew it like that. And actually, is that may be the week, that may be a weekly channel. Yeah, there we go. So this was a weekly. You see I just coming up, back down, up, back down, up, back down. Basically trading in this weekly channel. So that was my thought process. Market opens. If this breaks 141, I'm basically trading this back up to that line right there. And that's actually, let me see. Let's look at the 4-hour real quick. There we go. So see on the hourly, on the weekly, you were just seeing candle, candle. On the 4-hour, you see how I was trading it. Up, down, back, up, back down, up, back down. And then potent move right there. So that was a 4-hour. Because if it was a weekly, it would have been green. So that was my thought process on that. So above 141, stop just below this right here, because if this breaks that area, this is possibly going back down. So let's look and see where we got in this trade at. I got in at 185 on this candle. So not catching the top for a change. That's pretty good. But getting in as this is breaking 141. And let's see where we got out of this at. Actually, hold on. Yeah, so we're getting in on this candle. 138, same difference though. Not quite the top of the candle. And see how we had the little tail there? That's that tail when it came back right there. So getting in right there, that's where we got out at. So let's come over here on this chart and see. So, and I'm going to change this to a 1 minute just so we can drop candles on the chart. And then I'll switch it back to the 2 minute. So getting out as this is pulling back down. And then same exact candle. So you'll notice I got out of the first contract at 190. I got out of the second contract at 181. Made $95 on this trade. And like I said, risking $50, 2 to 1, 100 bucks. Good solid trade. But look at this though. I just want to show. So we got out at an average of 185. The next candle went to 244, 245. Let's highlight it. 245. This thing went another $60 per contract. So that was another $120 that could have been had in this candle right here. But I got what I wanted out of the trade. I did not want to stick around to see if this thing was going to possibly flush back down. Based on my drawings, I kind of knew that this had room back up to there. And again, that's that 4-hour channel. Notice how I tested it, finally broke it. Now the ceiling has become the floor. And look at that. That's why you got to mark your charts up with whatever system, whatever drawings you want to use, but use those tools. If you're going to use moving averages, like I say, the moving averages I just use for baselines. I don't get in trades based off of those. Same thing with VWAP, but it's good to know where certain things are. So this thing ends up making a high of 146. Let's see what the high of the morning is. Man, high of the morning is 325. So solid trade. We were in the right stock. This is actually one, initially I was looking to possibly short, thinking it was going to fail to get in this area. And look at that. It has just went crazy. And the reason that I thought it might fail, actually the top side of it, I'm really thinking that it might fail. Let's come over to the weekly real quick. This is that same shadowed area. And if you notice, 147.39 is the high. It tried to break it. It couldn't, and it got flushed back down. Look at where we're at. We are back up there again. So I might keep this on my watch list next couple of days to possibly see a push back down. And I might be interested in getting some puts or possibly a break and a retest to hold this high, because coming up to a pretty significant area. But on that note, I'm going to go ahead and wrap up this recap. Hopefully y'all enjoyed it. Thanks for checking me out as always. If you have not hit that like button, now would be a superb time to do it. If you're not subscribed, please think about subscribing. And as always, we can continue the conversation in the comments. Jerome Powell is supposed to be speaking again tomorrow. So we'll have to see what type of impact that has on the market. But it was good to be able to get in and get out of the market, finding a solid pattern, a solid thesis to that pattern, and getting in and getting out. Like I said, options are viable if you're trading out of a small account. This particular trade, I definitely would have had to take the option trade in the small account, because I don't got $7,000 just to have tied up for 2 days. I spent $300. That same $300 will be back in my account tomorrow to trade with. Had I took the option or the stock trade in a cash account, I wouldn't be able to touch that money again until Thursday. So definitely think about that if you're thinking about starting a small account trading. Again, make sure that the trade is well thought out. You want to have your entry, you want to have your stop, and you want to have your target. You want to have those 3 pieces of information, and you have to respect that stop. If the trade goes against you, accept it. You was wrong. Don't try to be right in a trade, because trying to be right will take your money. Trust me. Trust me. Early on, I thought I was right in every trade, and I would just be moving my stop, and it would just be going down further and further. Luckily, I was not one of those that would try to average down into the trade. Once it got to a certain low, once it got to the abyss, I just get out of the trade, and I'm like, you big dummy. But again, just remember that. All right, on that note, I am up out of here. Peace.